Well, good evening, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for Thursday, the 3rd of November, 2022. And the reason you're seeing me is simple. Number one, I'm back in Chicago. More important, I did not win the Powerball. So, or is it Mega Millions? One of those for the $1 billion. If I won the billion, I wonder if I'd still do these. The answer would probably be yes. And you'd go, why? And the answer is because it's my hobby and I like to do it. It's that simple, all right? It's funny. I was gone for a week. You do realize for my paid subscribers, I didn't miss a beat, and for most of you, I didn't. I apologize for the video or the sound quality, but I'm up in the Sierra Mountains on a Starlink. There is nothing. If I leave the compound where we're at 5 minutes, there's no cell phone, there's nothing. I did my best for you, so I'm sorry that some of you wrote it, but what's wrong with you? I kept telling you, I'm nowhere around. Kick up your volume, enjoy it, okay? Most people wouldn't do this. They would take off the whole time. I didn't. All right, so what about the Fed chair? Well, what did he say? And if you didn't get it, there's something wrong with you. I don't care what Mary Daly says. I don't care what James Bullard says. I don't care what Neil says. I don't care what any of them say. The Fed chair is listening to one person himself. He gets the input, and he threw it all out. You know what he said? Jobs data is going to stay strong. The economy's super strong with jobs that have to have their people want them. The JOLTS data is strong. We're going to get a jobs report tomorrow. The odds are that it's going to stay strong. Maybe the Fed can get the unemployment up into the 4+ range, but that isn't what he's focusing on. Okay, now you got that term. You don't have to agree with me. He said it. I didn't. What did he say? He said what we have to focus on is the CPI. And he said the Fed cannot create supply of commodities. That's another factor all by itself. There's many forces. The Fed looks at what's going on in Ukraine, how it's working with Saudi Arabia, Russia, all these crazy things that are going on. But what they're focusing on is the inflation. And he said that there's a lag. So they've been doing these rate hikes, they've come up, and they think they're at a point where they should start seeing the impact via the lag of some of these hikes and what they'll do. If they don't see what they want, they being him and he alone. That's the difference that you have right here. It's him. If he doesn't see it, maybe they won't go 50 points. You know, as a committee, they decide they can put their input in. They might go 75, they might go 50 points. But what did he tell you? He said they're going longer than he thought they would before. So the dot plot in September, he said, is out the window. We'll get a new dot plot in December. It probably is going longer. So it goes later into 2023. Do we have to get 75-point hikes? No. If he goes from 75 to 50, has he pivoted? No. He answered your questions. There is no pivot till he's comfortable. You might go from 50 to 25. So if you're defining a pivot, being, we're not staying at 75, that's fine. But don't tell me we're not raising rates. Which one? You're raising it at a slower rate, but longer? Okay, that makes all the sense in the world. If you want to give yourself time to see, is there going to be a lag effect from this on the economy? That's what you've got. So all this talk of these different Fed presidents coming out and other governors coming out that are there and telling you, we can't do this, we can't do that. There's one man in control, and his legacy, write this down, his legacy is beating this genie right now. He just got reappointed. He's got his years to do it. That's his legacy. He's mentioned Volcker, not in this speech that I was listening to, but the other one, and I did catch it in the airport. That genie's going to get beaten by him. So he's not going to listen to the committee and make a mistake. If he makes it, it's on him. It's not going to be the others. You may not like to hear that, but that's what I think it is. So from my point of view, okay, maybe we're into the second quarter of the year when we can finally hold. But what did he also say? don't look for declines real fast. The Fed can overshoot this, and it has the tools to fix what they overshoot. Again, his words yesterday. Does that sound to you like a man that's going to stop early? If you want to believe that, go. Do what you want. I could give a darn what all the big firms say. That's what I believe. Now, if we look at this whole rally that took place while I was gone, it's amazing, isn't it? We had a market that rallied up. Remember, I have that word, line in the sand, where the resistance comes in, the 18-week moving average of closes. You rallied back to it, and you've left go already. You're down 5% for the week so far. When you take a look at this chart, this was a nice rally in the market. No question about it. You had a pattern of higher lows and higher highs, and this whole thing came crashing down on the market when? Bring it to you. Right here, this day, Tuesday, November 1st. Why? Because you had an outside day down. It's the first time you have a higher high and a lower low. That ended the uptrend in the market as I see it. You had your follow through that came about on what the Fed said. And today you're getting a little more play. Okay, so we'll see where it goes. Are you trending here? No. You've ended this rally. That's what you did on a daily chart. Where did it end? It went to the 100-day moving average, and it went to the Bollinger Band. That combination proved lethal. What are the odds of closing over the black lines or under them? 5% of the time. Yes, you want to get that 5%. What's the point of having them on the thing? If it's 100% of the time, they'll stay in it all the time. Why have that there? But then you have to learn to play with the momentum. And when we come back to the momentum of the chart, to me, this was the easier part of the whole thing. Because with the market, let's see if I can get this to happen. Yeah, there we are. Okay. Right here, November 2nd, you lost the embedded reading. The odds favor. Now you're going to get to the 18-day average of closes. You got there. Okay, so you've hit your target. Can you just play around here for a bit? Sure you could. Or you can slip back down into this zone for more support. Either way, you're out of your uptrend. Are you downtrending? No. You have a higher high, lower low. You're not in a trend down. Is the NASDAQ in a downtrend? Oh, yes. This one has lower highs, lower lows, oversold as can be, not trying to develop the blue and the red embedding like they did here at this point in time. When you get that, that's very bearish. That until you lose that pattern, it's a sign the market's embedded, locked in, that trend in it. How do you resolve it? You either go sideways or lower. To end it, you rally in a downtrend. One of the three happens. Well, you can still be going down here a little lower. What about the Dow? Okay, let's take the Dow and go back on this one too. So here's the Dow, and this is the close of business today, November 3rd. You just lost your embedded reading. You hadn't lost it. Let's go back another day, and let's go to yesterday, Tuesday, okay, 2 days ago. Here's the market trying to break through the low the day before. Let's go back and take a look. The range of that day is 32,942 to 32,617. We make a higher high, we make a lower low. There's your outside day down, and that gives you everything you need. I actually had this market breaking the day before. In other words, a Tuesday was when it lost everything I wanted it to, and the confirmation happened not yesterday. The confirmation's today. Now you lost your embedded reading. The odds favor the market's going to make a run at the 100-day average and possibly the 18. And this is what you look like right now. Notice the two are coming together also. You got about a 150-point difference, but they're starting to offer you the support. Where did the market fail? For all purposes, the combination of the 200-day average and the upper Bollinger Band was the zone. And I teach that over and over on the charting that I teach to people. Certainly cover it in my morning subscriber videos. In the Russell, game over here too. When the market came up, it had an embedded reading. There you go. All right, this is November 1st. You lose it. Game's over. Okay, unless you re-embed right away, the odds favor you're going back to the closest main moving average, downward to it. All right, that number is the 18-day average, which you hit today, and that's your first support zone. Pretty simple. It's not that difficult. Does it everything always work on a chart? No. Does this thing work a lot? Watch me. You tell me as you go through, and all these videos are there, so you can go look at them on YouTube. We keep quite a few of them up at a time. In the VIX cash, I still have, or not me, but the chart still has an embedded reading, which is confusing the heck out of me. Why? Normally, if you're dropping in the VIX, what are you doing in the stock market? You're rallying. Why? Because this is that insurance play. And the market doesn't, what's it doing? They're not buying the insurance. They're not paying up for it. So this break is very confusing using this. I mean, super confusing. I think the pros were writing right here, puts, and as I put out in my subscriber video, I said, I think these guys are caught, and I think they're going to try to get out at the 100-day average and the 200 and just call it a day. This thing's not making sense, and I think they did that. Doesn't mean I'm right, but that was my thought. In the bonds, market's still drifting away. Notice the resistance is this 18-day average of close, that line in the sand. When you get down, you lose an embedded reading like you did here. The objective is to get there, and that's where the game starts fresh, and that's all that you did. As we get to the 10-year note, this was stronger than the 30. It got up and tried to hold above that 18, and I think you see this pretty clear here. I'll come back right here. This was your battleground. And this was yesterday, not today. Lower highs, lower lows. You're in a downtrend at this point. You never did embed. If it drops, the objective is going to be this 109 plus right here. If it can rally over that high, it'll be the upper Bollinger Band. It decided to drop today, challenge that number, and just like magic, it held it. Why? You think I'm the only pro that watches this and says, hey, be it you hit it, give it a tick, whatever it is, the odds are 95% of the time it's going to hold that, and that's what the pros use. You may not, because you may not believe in it. Okay, but you hear me saying it. Dollar index, if you rally, look for bigger resistance at the upper Bollinger Band. Are you trending? No. You have the trend down, you have the bias up, you had an outside day down, you took out the high of that. That often results in a challenge of the closest either main moving average or a Bollinger Band, and the stop on that, if I'm wrong, is taking back out that day's low. It's pretty simple. In the euro, it's the flip-flop of the dollar. 40% of the dollar index is comprised of the euro. Therefore, they're mirrors, the opposite way of each other. So if you get down to 96, 99 roughly, that's where I'm looking for support. You're oversold, and because you have the swing line up and the bias down, game over. Plus you had an outside day up, you took that out, and that's the target. We'll see if it gets there. In the British pound, bearish. What more can I say? They're not through. Did you hear Mr. Bailey? He said they're going into a prolonged recession. The pain is there. You got the number one and the guy telling you, why would you want to be long the British pound? So now the pros probably looking very hard on rallies back to the 18-day average, which stops over the recent high, to see can it make it to the lower band before it gets really oversold. You're knocking on the door of oversold, because any reading under 30, the way I teach charting, is oversold, and I think you stop attracting new short money unless you re-embed at that point, or embed. In Bitcoin, I keep reading about everybody talking about the breakout over $20,000 in Bitcoin, and it's going to run, and this is the bottom. Okay, I guess I can understand all this sideways action having formed that thought process. I'm not against that. If you take this out, could even be a false attempt at 18,000. But it doesn't look ready to me that it's going to run. It's an overbought market that came up to Bollinger Bands, failed. Now you've got your 100-day average up here. You don't even have 200 days that you can plot on the chart yet. I don't see it. I'm not bearish though. That's a big difference. I had been a bear for a long time. In Brent versus WTI January oil, difference is staying very strong at 755. Notice how the president, our president, is getting tremendous response from the oil companies with his plea that they should go out and produce more oil because he's Joe Biden. And his policy is help America. His policy to help America was misplaced when he took away what our other president had put in for energy independence. You may not have liked Trump. I get it. You know, first of all, he didn't win the presidency, okay? There were plenty of people that voted against him. But his energy policy was better than what we have. And I get the argument, you've got to balance green in it, and I'm for it. Who isn't? We want to save the planet. That takes time. Not a couple of years. That was the Biden plan, a couple of years. Why wouldn't you get the Keystone in there, other things? You know what I'm saying. Farmers are out there. I had one of my clients write me, the fuel cost, how he does it. I understand all this, and so should you. This should have gone much slower, but gone with definitive guideposts all the way along instead of turning this off, because now the guys getting the money are the shareholders of the oil companies. Unless you're blind and deaf, what's the best performing sector in the world? Forget America, the world, oil. Isn't that the dirty thing? There's a better way to do it. That's what I'm saying. And it should be rethought out, revisited, and planned accordingly. Oil is going to be around a very long time, my friends. When you look at WTI crude, it's overbought. You're into key resistance. I don't think it's a good spot right up there. I think you got some hefty resistance. I did tell you, and I said it before I left, you're going to get that cold weather. As sure as I'm here talking to you, it's going to happen. You wouldn't believe it in Chicago. It's 75 degrees today, setting records or hitting records. Depends where in the city you are. 75. I just left California, where I was in the mountain range, a place called Mad River, and we were 30 degrees, and I had a snowplow on Tuesday that I followed down the mountain because there was so much snow coming down. We were in literally a blizzard. And had to come down that mountain. It's a long ride. Remember, they're all twisty roads and everything. Unreal. And even Sacramento, 50s. We are 20 degrees warmer than California. It's weird. There's strange things going on. Now the nat gas. You got to keep your eye on this baby. It's got several things. Number one, there's going to be more rigs coming on. Before the end of the year, 45 more rigs. Number two, you've got, at the same time, the Texas Freeport area, that LNG port, is going to reopen sometime this month. Now, not fully reopen, and I don't know the proportion that they're going to open, but some of it will reopen. Well, that whole thing was 16% of our exports. So you're going to start losing some of this, but you're getting more supply. So you got to keep your eye. Right now, the battleground's clearly the 18-day average. If it can clear 662 and stay over it, you probably try a run up here. If you fail here and you get through it, I don't see a sell signal. I can see potential buys, and that's basically all that I'm seeing in the marketplace. Now, I talk about all this. While I was gone, you do realize I was putting out my morning subscriber videos, not the ones you see on YouTube for my paid subscribers. I think the only day I missed was yesterday, and that's because of my time with the travel and what we had to do. But even then, I was able to put out in writing for my researchers a write-up. I was in the airport listening on my earbuds and everything to the Fed talk, and I put out a survey for it, and I gave it to my clients so that they could see what it is. So if you're interested in getting ideas, and that's what this is about, I come out, my charts will look like this. They look a lot different than the ones you're seeing here. They're going to have more studies on them. No more studies, by the way. just studies. You're going to have a window envelope you don't see here, but another moving average, and how I tie it all together is very different. And from there, my goal is to throw ideas at you. You see what I'm seeing. I'm going to walk you through each chart. Sometimes I'll mix up in the charts the weekly and the dailies to prove a point. On weekends, I review all weekly charts because I have traders that want to trade the bigger picture, and you don't do that off a daily. You do that off the weekly. You use the daily to get in and the weekly for the bigger picture. Okay, and that's how it works. Remember though, when you trade weekly, you're taking on often more risk because the chart's doing a week at a time and the ranges change, so it's a little bit different. Okay, but it's something for everybody. Whatever your style, I want to match it. And that's what we do here. So you're able to see it, and there's a scroll bar you pull. It'll work on your phone. Yeah, it's going to work on your phone. So barring me being in California where I couldn't get the Starlink, I apologize to sometimes do the whole link. I had to cut down and talk faster. It couldn't handle the size of the videos, and we had to make some changes for it. But barring that, we're still got it up. I was impressed with Starlink, by the way. Beyond a scale 1 to 10 of 10. We're watching ball games in the middle of nowhere. Everybody's got one out there. It's not DirecTV that I'm seeing. It's Starlink that people are using out there with their Rokus. Very, very fascinating. In any case, if you'd like to learn this, learn a heck of a lot more, follow my finger, go up to the top here. It'll take you into my research area. Read about it. Join us with that. Go to iraepstein.com under research. Everything is laid out. And if you want to learn my Bollinger Band and my charting course, go under the education section. In the meantime, I'm Ira Epstein. Good to be back.